Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host. I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamowen here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. All right, Sandy, let's kick things off with a significant development in the Ontario real estate market. The Real Estate Council of Ontario, or RECO, is seeking an injunction from the province's Superior Court to freeze the assets of iPro Realty and its co-founders. This comes after the brokerage was found to have a $10.5 million shortfall from consumer and commission trust accounts. Quite a hefty sum, wouldn't you say?
Absolutely, Steve. It's a substantial amount, and it's concerning to see such a breach of trust. RECO's investigation revealed that the co-founders, Rui Alves and Fidele Colucci, illegally dispersed these funds. It's a reminder of how critical it is to have strict oversight and accountability in real estate transactions.
Indeed. And what's interesting is that RECO facilitated the transfer of about 2,400 iPro employees to iCloud Realty, which shows their commitment to protecting the workforce amid this turmoil. However, they also struck a deal allowing the co-founders to escape charges and fines, which raises questions about accountability, don't you think?
That's a fair point, Steve. The deal to avoid charges might seem lenient, but RECO's priority seems to be the recovery of the funds and ensuring the stability of the real estate market. It's a tricky balance between holding individuals accountable and safeguarding the interests of consumers and employees.
True, and RECO's CEO Brenda Buchanan emphasized their commitment to pursuing every legal step available to protect consumers and registrants. This includes tracing and returning the diverted funds to the trust accounts. It's a strong stance, and it highlights the importance of trust in handling public funds.
Yes, Steve. And let's not forget the role of the Ontario Provincial Police, who have launched an investigation. It shows that multiple layers of oversight are being activated to address this breach. It's crucial for maintaining confidence in the real estate sector.
Definitely, Sandy. With RECO also cooperating with law enforcement and conducting a forensic audit alongside an independent audit by Dentons Canada, it seems like they're pulling out all the stops to resolve this issue. It's a complex situation, but it seems like all necessary actions are being taken to protect stakeholders.
I agree, Steve. It's a complex web, but with these steps, there's hope for resolution. It's important for listeners to stay informed about such developments, as they impact the broader market and individual real estate transactions. Let's talk about the latest findings from the Royal Bank of Canada regarding Canadian household net worth in the second quarter of 2025. It's interesting to note that while financial markets bounced back, the housing market slowdown put a brake on net worth gains. Steve, what do you think about this development?
Well, Sandy, it's a classic case of mixed signals in the economy. On one hand, we saw real estate values slip, which definitely put pressure on household balance sheets. According to RBC's analysis, based on Statistics Canada's data, the Canadian Real Estate Association's MLS Home Price Index dropped by 1.2% in the second quarter, erasing earlier gains. But on the other hand, financial assets surged, with the S&P/TSX composite rising by 7.8%, which helped boost household net worth by 1.5% to $17.9 trillion.
That's right, Steve. It's a fascinating dynamic, and it shows how interconnected the housing market and financial markets are. Despite the softer housing market, the increase in financial assets provided a buffer for Canadians. However, RBC did warn that debt servicing costs are expected to rise as fixed-rate mortgages renew at higher rates. It's a reminder of the delicate balance many households are trying to maintain.
Absolutely, Sandy. The debt to disposable income ratio climbed to 174.9% as debt growth outpaced income gains of just 0.3%. RBC highlighted that while debt servicing costs remain below the 2023 peak, they could increase, especially if the unemployment rate rises. It's crucial to monitor these factors because they can significantly impact household finances.
And it's also worth mentioning that Statistics Canada pointed out that most of the net worth gains came from rising financial assets, with the top 20% of households holding nearly 70% of those assets. This highlights the ongoing issue of wealth inequality in our country, which is something that cannot be ignored.
True, Sandy. The household savings rate eased to 5% in Q2, which reflects robust spending and a softer labor market. RBC expects housing market activity to gradually recover, anticipating a modest recovery in the second half of 2025 and further momentum into 2026. However, there are still concerns, like the 35% tariff threat, that could impact the market.
That's a valid point, Steve. Sean Cathcart, CREA's senior economist, mentioned that the anticipated rebound in Canadian housing markets might have only been delayed by a few months. At the end of June, there were 206,435 properties listed on Canadian MLS systems, which is just 1% below the long-term average for that time of year, indicating that the market is still active.
Yes, Sandy. And national inventory stood at 4.7 months, slightly under the long-term average of 5 months. This suggests we're not quite in a seller's market, which is typically below 3.6 months, but we're also not in a buyer's market, which is above 6.4 months. It's a nuanced situation, and it will be interesting to see how it unfolds in the coming months. Sandy, a recent survey from Equifax Canada shows that more than half of Canadian mortgage holders are considering switching lenders or refinancing when their mortgage is up for renewal. This trend seems to be driven largely by younger borrowers and newcomers. What are your thoughts on this development?
It's quite telling, Steve. The survey, which gathered insights from over 1,500 Canadians, highlights a generational divide in how borrowers perceive credit. Younger adults, especially those under 35, are significantly more open to changing lenders if it means better credit building tools. In fact, 57% of them would switch financial institutions for this reason, compared to just 38% of those aged 35 and older.
That's an interesting perspective, Sandy. Julie Kuzmich from Equifax Canada pointed out that younger borrowers are seeking tools to monitor and strengthen their credit health. It seems that the demand for more proactive credit support is on the rise, with 40% of respondents feeling their current lender could do more to address their changing credit needs.
Absolutely, Steve. Borrowers are prioritizing credit access and support, and they're not hesitant to look elsewhere if their needs aren't met. Nearly 2 in 5 mortgage holders have considered switching lenders in the past year, and a similar proportion have received refinancing offers from other institutions. This shows a growing willingness to explore better options.
It's also worth noting, Sandy, that the Bank of Canada has mentioned that about 60% of Canadian mortgage holders renewing this year and in 2026 will face payment increases. This could be a significant factor prompting more consumers to shop around at renewal and seek out alternative lenders for better terms or more flexible credit solutions.
That's a great point, Steve. And the survey also highlighted some differences among newcomers to Canada. 55% of them considered switching providers, and 53% received refinancing or new mortgage offers. This demographic appears to be quite active in seeking credit solutions that align with their financial goals.
Indeed, Sandy. The importance of credit access is clear, with 84% of newcomers citing it as essential for meeting their goals. Interestingly, while 72% of Canadians aged 35 and older say they have sufficient access to credit, only 62% of those under 35 agree. This suggests younger Canadians are more likely to expect changes in their credit needs.
And despite these challenges, Steve, a vast majority, 97% of Canadians, believe that protecting their credit and identity is crucial. Tracy Valco from Valco Financial even suggests that brokers should have hard conversations with clients about right sizing, reassessing their financial situation to manage debt effectively, and potentially downsizing to alleviate stress.
That's a practical approach, Sandy. With rising interest rates and tighter lending criteria, consumers are increasingly considering right sizing as a strategy to manage financial stress. It's about aligning their mortgage and housing needs with their current income and financial capabilities.
Exactly, Steve. This trend of switching lenders and refinancing at renewal time reflects the dynamic nature of the mortgage market. It's crucial for borrowers to stay informed and explore all available options to secure the best terms for their situation. So, Steve, let's wrap up today's episode with a look at the best fixed and variable mortgage rates of the week. It seems like the economic landscape is shifting in a way that's affecting these rates.
That's right, Sandy. According to Salman Farouqi's report, weak economic data has significantly altered the outlook for both fixed and variable mortgage rates in Canada. The 5-year bond yield, which is a major influencer of 5-year fixed mortgage rates, is at its lowest point since May. This drop is prompting lenders to consider decreasing their rates.
That's an interesting development, Steve. It seems that the decrease in yields is tied to higher expectations that the Bank of Canada will cut its headline interest rate soon, especially after the Canadian gross domestic product numbers came in weaker than anticipated.
Yes, the markets are pricing in an 80% chance of a quarter percentage point cut on September 17th, according to data from LSEG. This potential cut, along with the expectation of 2 to 3 more rate cuts by the end of 2026, could make variable rate mortgages more attractive than fixed ones once again.
And currently, we're seeing 5-year fixed and variable rates at similar levels. But with the possibility of these rate cuts, variable rate mortgages might just become the better option for many borrowers.
Exactly, Sandy. It's a dynamic situation, and borrowers should stay informed. RateHub.ca has been a valuable resource for comparing mortgage rates, helping Canadians find the best options available. As of market close on September 11th, they provided some of the lowest available rates for each term and category.
It's crucial for potential homeowners and those looking to renew their mortgages to keep an eye on these developments. Understanding the implications of these rate changes can help them make more informed decisions.
Absolutely, Sandy. And with that, we've covered a lot of ground today, from legal developments in the real estate sector to economic factors impacting mortgage rates. It's all about staying informed and making the best decisions based on the latest information.
Exactly, Steve. And with that, thank you to our listeners for joining us on this episode of the Ontario Mortgage and Real Estate Insights podcast. Stay tuned for more updates and insights in our future episodes.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.